Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar found renewed momentum after Friday's drop and now looks closer towards the initial target, which is around 63 figure 5. From there, the market needs to climb further, and if it potentially can reinstate the top side, it would need to clear 63.55 that was rejected last week, and if so, would give further indication to the bullish case and then look towards the region of 65.5. Keep an eye on this level as it should ignite further momentum. There is bullish divergence from the MACD and also the fact that the RSI presently is holding a weak positive signal, which could reaffirm the case for that challenge at least around 63.5. Finally, the Euro's found further momentum overnight and it clears the resistance of 97.95 and now puts on track the target of 98.60, with the downtrend coming in at 99 figure 35. A little bit of caution as we get towards this level, as we can see over previous attempts emanate all the way back towards the beginning of this year, is that the market has rejected many times. However, I do like the way this pattern is shaping up. Furthermore, the engulfing candle has been confirmed to support the bullish case, and therefore with the previous candle, that is with the inverted hammer, then the market may actually eventually, if it can break this level, and would reinstate around 103 to 104 as a potential target. A good clear run would see this bull break from this break of the trend, but keep an eye on the technical patterns, and if so, I do expect at least the challenge of 99 figure 35 where this trend line is before any profit taking or any attempt to stage for a pullback. The dollar yen not backing down and still remains relatively firm as it now tackles the next level, which is seen around 149.25. I still would heed much caution because of where we are at the moment, and there hasn't been any sign of a bearish candle since the beginning of this month, and we could easily see a whipsaw price action. Previously, when the Bank of Japan intervened, it dropped 5 big figures, and we could do so again. That would see us fall back to around 144. Quite a severe move, I know, but nevertheless, an intervention does cause and trigger off, and no doubt there is plenty of stop losses as we drop back towards this 147 area. Sterling also a little bit stronger overnight, and the market is now tackling this level, which is seen around 114 figure 50. You can see that the market did have a little sort of touch towards that level last night. Nevertheless, I do like the way this technical shape is set up, and therefore could see a further break for sterling, and if so, would see a rally on towards 118 if we see a clearance of 114.45. Gold did make an attempt to at least clear some of those losses from Friday, but failed. But we've got an inverted hammer, and therefore could see further gains, that is towards the top side, which comes in anywhere towards the region of 1,660 to 1,676 to 80. Let me bring this down a little bit. So somewhere around this region that needs to be cleared to get any further scope for a rally to 1,700 and 1,730. In light of the pattern, the market is still somewhat negative, and that could give us further indication that this inverted hammer may not come through to support any further gains to sustain, and therefore could look back towards the bottom side of the range, which is seen at 1,621 to 24. Wrapping up with oil, the market is still pressuring the downside since that rejection around that 88 level, and if we do see further weakness, then a close under $84 a barrel would see further targets coming up at 82, and with an objective of $81 a barrel. Well, that wraps it for the morning. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.